Join me as I dive deep into the world of investing and challenge myself to explain the S&P 500 Index Fund in just 5 minutes. The S&P 500 Index Fund is a staple in the investing world, and for good reason. It's a popular choice among investors, and its significance cannot be overstated. This fund provides exposure to the 500 largest publicly traded companies in the U.S., making it a great way to tap into the growth potential of the American economy. When it comes to selecting the right investment options, many investors face a common dilemma. With so many choices available, it can be overwhelming to decide which way to go. This is especially true for those who are new to investing. You might find yourself asking questions like, should I invest in individual stocks or mutual funds? Or, what's the right asset allocation for my portfolio? The S&P 500 Index Fund addresses these challenges by providing a simple, yet effective way to invest in the U.S. stock market. Trying to pick individual winners can be a daunting task, especially for those who don't have the time or expertise to research and analyze the market. The S&P 500 Index Fund takes the guesswork out of investing, giving you broad diversification and instant exposure to some of the world's most successful companies. And with its low fees, you can keep more of your hard-earned money. Furthermore, the S&P 500 Index Fund is a great way to reduce risk in your portfolio. By investing in a broad index, you're spreading your risk across 500 different companies, which can help to smooth out market fluctuations. This can be especially important for those who are risk-averse or have a shorter investment time frame. The S&P 500 Index Fund is essentially a basket of the 500 largest publicly traded companies in the U.S., selected by the S&P 500 Index Committee. This committee chooses companies based on market size, liquidity, and industry representation, ensuring that the fund is a true reflection of the U.S. stock market. The fund's historical performance has been impressive, with long-term returns that have consistently outpaced inflation and many other investment options. One of the key benefits of the S&P 500 Index Fund is its low fees. Because it's an index fund, it doesn't require a team of expensive analysts or portfolio managers, which means more of your money goes towards your investments. Additionally, the fund's diversified portfolio helps to reduce risk, making it a great core holding for any investment portfolio. Despite its many benefits, the S&P 500 Index Fund is not without its risks. Like any investment, it's subject to market fluctuations, and its value can decrease as well as increase. However, for investors who are willing to take a long-term view, the S&P 500 Index Fund has historically provided strong returns, making it a great addition to a diversified investment portfolio. The S&P 500 Index Fund has consistently demonstrated its long-term growth potential, outpacing many other investment strategies and funds. In fact, if you had invested $10,000 in the S&P 500 Index Fund 30 years ago, your investment would be worth over $100,000 today. That's the power of long-term investing and the S&P 500 Index Fund's growth potential. In conclusion, the S&P 500 Index Fund is a powerful investment tool that every investor should consider. It provides broad diversification, instant exposure to some of the world's most successful companies, and a low-cost way to invest in the U.S. stock market. Whether you're a seasoned investor or just starting out, the S&P 500 Index Fund is a great way to tap into the growth potential of the American economy. Thanks for watching, and I'd love to hear your thoughts on the S&P 500 Index Fund in the comments below. If you're interested in learning more about investment strategies and how to grow your wealth, be sure to check out my other videos.